Good morning, everybody in Europe. Good afternoon, everybody in China. Welcome to the EU SME Center webinar series. My name is Ludmila Hiklova, and I am legal advisor in our EU SME Center. Before we start with our today's topic, which is about turnover taxes in China, let me shortly introduce our EU SME Center and what services we provide. We provide to small and medium-sized companies from Europe coming to invest or export to China. One technical comment at the beginning. If you have during the webinar any question at your screen, you can see the small window where is a place for placing the questions. So please do it. Your questions will be answered either during the webinar by our staff or at the end during the Q&A session. So now about the EU SME Center. The center was established more than 3 years ago, and it is a project fully funded by the European Union, and this allows us to provide all our services free of charge. We provide support to small and medium-sized companies from Europe which have decided to come to China either to invest or export their products, their goods, services, or the technology. We have in our office in Beijing expertise covering 4 areas. We have here business development experts, legal and tax advisors, standards and conformity experts, and advisors on HR and training. We provide our support via replying to your inquiries, either via email or face-to-face consultations. We publish a lot of useful information via guidelines or the reports or the case studies. We conduct as well the trainings like the webinar every Tuesday or these weeks even more often. And we have a very useful databases covering about 40 laws and regulations in China. We have database of the service providers, which is a directory of the companies like law firms, tax advisors, accounting firms, and so on. We have as well updated the database on exhibitions and fairs in China. We provide, in addition to the information and advice, support services like hot desking, which means that in case you will come to China, to Beijing, and you have business meetings, you can stay with us for a couple of days or weeks and use our facilities in our office. We do in a limited way as well the matchmaking and networking. All our informations are available via the websites eusmecenter.org.cn. And now today to today's topics, which is about China's turnover tax system. So before I introduce our today's speaker, I would like to ask you a question which will help us to assess your background and your experience. And let me first launch a first poll. And the question is about your background, whether you are a payer of any turnover tax, which means VAT or consumption tax or BT tax, or whether you are not payer of any of those tax, or whether you are not payer at the moment, but you plan to be in the future, means that you plan to develop the business in China. So I can see the numbers coming. Yeah, so let me share with you the results. 78% of you are not payer of any turnover tax at the moment, and 11% and 11% for both cases you are either payer or you are not a payer. So I think that our webinar is quite well scheduled, and that we will provide useful information to you at today's session. So now let's go and let's move forward, and let me introduce our today's speaker, which is Mrs. Grace Shi. Grace is a senior partner at Ecovis Consulting Limited in Beijing in China, and she is very experienced tax advisor, and not only tax advisor, she has long experience in accounting and auditing both in China and Europe. And on a daily basis, it's her work. She advises foreign and domestic small and medium enterprises, but as well the large companies on financial and tax issues, for example, tax planning, restructuring of invested enterprises, and so on. She is as well a regular contributor to various magazines, and she regularly presents on various events. So, Grace, welcome, and I will pass the word to you.
Hi, thanks, Ludmila, and hello, everyone. I'm Grace Shi, and today, thank you very much to join this webinar, and also I would like to thank EU SME Center to give us the opportunity to share our knowledge and experience regarding the China's turnover tax system with you. So, and today's webinar, we are aimed to outline the basic logic and guidelines of China's turnover tax system, and will with some highlights on special area or topic SMEs should be aware of. So, we do hope based on this webinar, the SMEs can understand how this system works and can make best of use it. For sure, it's not simply in terms of saving tax costs, but also to avoid compliance risk. So today's webinar will cover 4 sessions. First, we come up with the brief introduction about the turnover tax system in China, and then the second session is the legal framework. This is the key session of this webinar. It will just cover the rules and regulations about the 3 categories of the turnover tax system, and together with some case studies. The third session is for the pilot reforms, because currently there is a very hot topic regarding the VAT reforms. So we will spend some time to talk about it. And the final session is for the turnover tax filing period. We will give you a brief introduction about the tax filing period and also the deadline for each turnover tax. Okay, so let's start with the brief introduction. So from this slide, you can see there's 3 categories of the turnover tax in China. The first one is the very common one, is the value-added tax. So this value-added tax, we call VAT, play a very important role in China. So it's covered about 30 to 40% of the total tax revenue in China. And so in China, it's around 90% of the enterprises here will apply for this VAT. And in China, for the VAT, is a very complicated and also very strict request tax system. So later we will spend a little bit more time for talking about the VAT. And for the business tax previously in China, this is a special tax, not very common in other countries. So this is kind of tax related to the services in China. But now, during the VAT reform, most taxable service of business tax will have a strand to be unified by the VAT in China. So he will play less and less role in China's tax system. And the last one is the consumption tax. The consumption tax is only applied for some specified product. This is based on the Chinese macroeconomic policy. So, for example, there's only some luxury commodities will apply. This is we can discuss also later. Okay, then we just start with our second session. It's for the legal framework. From this slide, you can see this is the strand for the VAT reforms works. So VAT is just start from 1994, and with several reforms during the time 2009, 2012, until now. So the Chinese government just roll out a very ambitious reforms. They want to unify the dual tax system. That means to combine this VAT and BT taxable service together, so to avoid the double tax burden to the enterprises. Yeah. So then let's talk about the VAT. So first of all, you can see the scope of the VAT. VAT will apply to 3 categories. You can see the first one, sales of goods and imports of goods, is quite straightforward. So when you sell the goods or import goods from overseas, you need to pay VAT. And in the middle, this provision of services. So that means for most kinds of service, it need to be regarded as the VAT taxable service. In the previous regulation, for the processing and the repair and the replacement service is granted to VAT. And during the reform of VAT, you can see the other 9 category of service is also regarded as the VAT taxable service. And how about the tax rate? From this chart, you can see there's 5 kinds of tax rate applied for the goods and the service of the taxpayer, from including the 17%, 13%, 11%, and 6%. And for the export goods or services, it can be granted by 0%. And in the blue color, you can see there's a special rate. This is 3%. It's what we call the levy rate for the small-scale taxpayer. This is we can discuss in the following slides. So in China, there's 2 types of taxpayers. There's one is called small-scale VAT taxpayer and general VAT taxpayer. What's the difference of this? So for the small-scale VAT payer, that means their business turnover will be below certain threshold. And then the tax rate is 3%. But accordingly, the input VAT the taxpayer get cannot be deducted. And what's the difference with the general VAT taxpayer? So that means for the general tax VAT payer, their business turnover will above the threshold. For example, for some companies, if the turnover, their turnover will above 800,000 or 500,000, depends on the different industry, and then they can be granted as the general VAT payer. And for sure, the other differences for the tax rate is quite different. It's not 3% level based on the tax rate. It should be including the 17%, 13%, 11%, and 6%. And the other very important difference is for the general VAT taxpayer, they can credit the input VAT they get from the vendors and the suppliers. So this is a very key difference, and you should keep in mind.
Grace, in this connection, I have a question. Can a small-scale VAT taxpayer, let's say that below that certain threshold, which is for the small-scale VAT taxpayer, can this company become a general VAT taxpayer?
Yes, they can be applied. If the small-scale VAT taxpayers' turnover can reach the target and to above the threshold, it can be applied and approved as the general VAT taxpayer. So for your better understanding, we just give you 2 case studies to show how the small-scale VAT payer works and how the general VAT taxpayer works. And you can see there's a formula about the small-scale VAT taxpayer, and the taxable income equal to the sales price divided by 1 plus this 3 levy rate of the VAT. And then the VAT payable is equal to the taxable income multiplied by 3%. There's a very simple sample here. For example, for company A, they are a small-scale VAT payer. It manufactures product D. For the past month, the income of the sales is 100. And then the purchase cost is 50, so how much they should pay for the VAT. So then we have a calculation, and the result is 2,912. So that means we just use this sales 100 to calculate the taxable income, and then multiply by 3%. We come up with the VAT payables. You can see here, even the company A buys some material and also some other costs with 50 cost, but the input VAT cannot be credited here. And the other sample is for the general VAT payer. You can see the difference very obviously in the calculation. They have the output VAT by the same amount of the sales. Let's say turnover, 17% of this 100 is equal to 17. And then meanwhile, for their purchase of costs, they will get the input VAT amounting to 70% of the 50, so that is equal to 8.5. Finally, we can conclude that the VAT payable equal to 17 minus 8.5 is equal to 8.5. So after talking about these differences, we would like to draw your attention about the 2 issues. One is for the requirements for claims on input VAT. Maybe you will think about to say, if I'm the general VAT payer, I can claim on all the input VAT I have, and then it will be automatically deducted in the tax system. But actually, it's you need to do further things. For example, the first criterion that's for sure you need to be granted as the general VAT payer. This is a must. And secondly, you need to keep a very exact accounting system to verify your VAT liabilities in your bookkeepings and also in your financial statement. So that means the tax bureau will check in your books during their investigation. If you cannot make sure what's your VAT liabilities, they will just have some penalties and make maybe some fines to you. And the worst case, you may lose your general VAT taxpayer certificate. And the other thing is you also need to apply a very special VAT invoice from the tax bureaus. And the invoice will link to the tax system and will be supervised by the tax bureau. And the second point I would like to share with you is that And you may get a lot of VAT invoice when you purchase goods, when you purchase service, and so on. But not all the invoice can be credit their input VAT. We just list down the major category about the non-taxable, non-deductible VAT. Is, for example, is including the non-taxable activities for a VAT, and also, for example, you purchase something, but this part of the goods or service is used for personal use or for staff welfares. And this kind of input VAT cannot be a credit by the output VAT. So this is the company need to make sure. Okay, so next we will talk about the VAT refunds for export. This is also a very popular topic, and also a lot of people would like to know. So we can, in China, so there is 3 types of VAT exemption and refund categories. One kind of exports can enjoy for the tax exemption and refund, but the other kind of export is only can enjoy the tax exemption but no refund. The worst one is for the export, they can either enjoy the tax exemption nor the refunds, because this is not encouraged by the Chinese government. And in China, there is 5 kind of tax refund rates. You can see from this chart, it's from 5% to 17%. But in China, the most popular one is 13%. It's used for the enterprise who do the export portions business. And when we calculate the tax refund, normally we will just follow these 3 procedures. That means we call the tax exemption, tax deduction, and tax refund. What's the meaning for tax exemption? So that means the export of goods can apply the tax exemption. That means that 0% VAT will need to be paid for the export of goods. And what's the meaning for tax deduction? So when you do the export business, you will also purchase some materials locally or overseas, and related input VAT can be deducted from the domestic sales. So that means this part of input VAT can be credited here. And for the tax refund, that means for the goods, if you have, if you calculate the tax refund based on the tax refund rate we mentioned in the last slide, and you can come up with the tax refund amount the company can get it. So in China, for this kind of tax exemption refund system is quite complicated. We just would like to share with you a kind of calculation how the tax refund works. And first case is related to the manufacturing company. So we say, for example, for company A, we have sales revenue for taxable goods of 1,500. This 1,500 included export revenue about 1,200 and domestic revenue about 300. So the company A just purchased duty-free raw material about 600, and domestic raw material about 500. So both types of the raw material are for the manufacturing export goods. So that means for these materials, no matter it's duty-free or it's a domestic purchase, are all used for this the taxable goods sales. So then how can we calculate the VAT refund company could get? First of all, we need to calculate the non-deductible VAT. So how to calculate this? So first we need to use this 1,200 of the export revenue because this should be tax-free for the export. And then because this duty-free 600 raw material is just purchased without paying any tax on it, so we need to deduct it. Then we need to use the difference about the VAT rate and export refund rate. That is 70% minus by 30% is 4%. So you can see for the non-deductible VAT is 24. This 24 actually is the cost of the company. So that means it cannot be credited and also it cannot be refunded. So that means in the financial statement, this 24 is the cost of the company. And then we need to calculate the VAT payables. From the case study, we can see the company also have some domestic revenue amounting to 300. So 70% of the output VAT need to pay for this domestic sales. And then we need to deduct for the input VAT. The input VAT is for the 600 multiplied by 17% and need to minus the 24 we're just talking about for the non-deductible VAT. So then we can see there's a 27 is taxable, is minus 27. This is that means the company has overpaid for the VAT, so the company can get it back. In addition, you can see we need also calculate the VAT refundable. How to calculate the VAT refundable? This is we need to use the export revenue 1,200 minus this 600 for the duty-free raw material multiple by this export refund rate is 13%. So you can see this VAT refundable is 78. But in China, the regulation is just regulate that you need to compare the VAT payable and the VAT refundable. So the less one can be refunded to your company, and the differences can be carried forward into the following months. So as a result, you can see there's 27 can be refunded to your company. Yeah, compared with this, the last case study for the trading company is more simple and more straightforward. So for the trading company, for the VAT refundable amount equal to the purchase price of the material multiplied by the export tax refund. So it's very simple to say if you just purchase 1,000 for the material and your export refund rate is 13%, so you can get this 13% back. All right, so for the calculation is a little bit complex in China for the tax refund, and but you can just no worry for that, because in China there is also a tax system here So if you just input all the data about your export, about your purchase, about VATs, and so on in the system correctly, your tax refund amount will be automatically calculated. So I would like to share with you about the VAT refund procedures here, so you can know what you should do to get the refund back. So first, the company needs to register in the tax bureau by submit the declaration form and your business license and some other license needed by the tax bureaus. And then for every month, you need to be ready for the VAT payment and refund applications with the tax bureaus during the period from the 1st to 15th of every month. So, and then for the documents preparation, it's a little bit complicated because in China, there is a two system works during the VAT refund procedure. So one is for the tax bureau system, and the other one is customs bureaus. So that means all the data need to be submitted in this bureau separately, including the documents like the declaration form for VAT payments, and also declaration forms for the VAT refund, and as well as your export invoice and your customer declaration papers, and also foreign exchange settlements forms. So you need to be ensure each of your data or documents need to be matched together. Otherwise, if they find some mismatched or some mistakes, your tax refund might be failed.
Just to give Grace a little bit of a break, if you feel a little bit confused or scared about these all this information as the calculations, please don't be. We are preparing in cooperation with Grace a guideline on turnover taxes, which will cover as well VAT, business tax, and the consumption tax, and all the calculations with detailed explanations. Plus, again, you can come return to recording of this webinar and all the slides, and you can go again through all the informations. And of course, EUSME Center, we are here ready to answer your questions, either related to these topics or some others. So let's move to another slide. Mm-hmm.
So next two slides, we will talking about the contract and the import processing. And contract processing and import processing are the ways of manufacturing. So that means where the importation of the raw materials are bounded. And also for the export of finished product, the VAT is exempt. So this is the true method the exportation company can apply it, because based on this true kind of method, it could be simplify the procedures about your import and export, and it's because some part is tax-free, you can save in your some cash flows. For example, when you import the bonded goods, no duty and VAT need to be paid at that moment. So that means this can be save your cash flow. But on the other hand, for contract processing and import processing, these two methods had a high requirement about the management. So that means you need to have your special warehouse, and you need to have the bounded area, and most importantly, the bonded material will be strictly supervised by the customers. So for the next slide, you can we have listed down the differences between the normal trade processing, import processing, and contract processing. For this topic, I would like to leave a little bit because this topic has been discussed by the seminar webinar for last period, right?
Exactly. We had last month. We had a webinar on the bonded zones and related procedure, including tax as well. So for those who are interested in this topic, you can have a look in our recordings on the website or the YouTube.
Yeah. Okay. All right. So and then by finishing the VAT session, the last page I would like to share with you is the deemed sales. So like we discussed previously, that means for when you provide the sales of goods, or when you import sales of goods, or when you provide the services, and you need to pay the VAT. And then the question comes up to say, if we did not directly sell our product and this service, for example, we just use our goods to give to some charities for free, or we will use our goods to give to our staffs, or we give to the goods to others for some marketing use and so on. So this is according to the Chinese regulation, this will be regarded as the deemed sales. So that means even you don't have some incomes of this sales of goods, you need to also pay the VAT as well. So how to calculate the base of how to calculate the amount of the taxable income? This can be according to the market price. Yeah. Okay. So we have finished up the VAT part. So let's start with the business tax. So for the business tax, it's imposed on the activities involving some intangible assets and partial services, which is not subject to VAT. And for example, for the intangible assets, we give you a sample to say when one company just transfer their land use right to the other company, and this part is subject to business tax. And also for some, not some taxable labor service, which is not subject to VAT, including for example, construction, for the finance and insurance, and the telecommunications, cultures and sports, entertainment. This kind of activities will be subject to business tax right now, but in the future, due to the reforms of VAT, it might be transferred to VAT as well. So we would like to draw your attention here because this kind of reform may have a big impact on your current and the future business model. So better you can keep it in mind and keep updates for the new regulations and rules and make your tax plannings accordingly. So how about the business tax rate? You can see it's very clear. So from 5%, 3% to the 20%. It's regulated very clearly by the rules. The calculation is also quite simple. For example, you have the construction service 1,000, and then your business tax is only 3% of this 1,000 is 30. After talking about the VAT and also for the business tax, I would like to share with you more information about the withholding agent, because a lot of companies, no matter for the local ones and also for the overseas ones, they have a lot of questions because for some companies, they don't have entities in China, but they will provide the service in China. So they have a lot of questions. How can I pay tax? Where can I pay tax? And how about tax amount and so on? So here, we just would like to show you a chart. You can see there's one foreign company. There's a two scenario. One is they have the permanent establishment in China. And the other company is without any entity or establishment in China. And then how they pay tax. Based on first scenario, so if you have the permanent establishment in China, you need to complete the tax registration and file the tax by yourself. So that means this will be by the permanent establishment in China, pay this by yourself. And if you have no entities in China, and then there's two ways. One way is you need to ask your service receiver to pay the tax on behalf of you. That means they will withhold the tax for you and then just give you a kind of tax certificate. Or you can also ask a kind of tax agent to help you to finalize the tax registration and also for the tax certificate issuance, so that you can make sure your activities in China has paid all the taxes. So to make it more clear and straightforward for you, we prepared two kind of case studies for you regarding the withholding agent. For example, for company A, it's a foreign party and it provides trademark licensing service to company B in Beijing, which are VAT taxable. So the invoice will be 100. Based on the contract, so this mentioned all the taxes are borne by the Chinese customer. Then how we calculate the Chinese tax? Since the tax need to be all just borne by the Chinese customer, we need to gross up all the invoice. So that means you can see from the formula, taxable income need to be calculated based on the invoice amount divided by the tax rate, including 10% withholding tax and VAT and also surcharges. We comes up the gross amount of the taxable income is 1,120, and then we use this amount to calculate the VAT, surcharge, and withholding tax. So that means this all the tax calculated together is 186.59859 will be withheld by company B. That means before company B pay out the money to you, they need to pay this tax first, and then with a certain kind of tax certificate, they can remit the money, 1,000 to you.
It's quite important information. It's important to note it, because usually and often the companies, the foreign companies providing services here to China, they expect the full price agreed in the contract, but they do not calculate with the withholding tax.
Mm-hmm. Yes. And just now we talk about one VAT withhold case study, and now we will talk about the business tax withheld by the Chinese company. So the same scenario to say company A is also a foreign party. It's provide the telecommunication related service to company B in Beijing. So they have also agreed on the agreement to say the invoice of the service is 1,000. Then how to calculate the related tax. So business tax is 5% for its 1,000 equal to 550, and then accordingly the surcharge withholding tax is 6 and 100 in total. So in total is 156. So because based on the agreement, all the tax are borne by the foreign party, that means this company B will withhold this 156 from this 1,000. So the difference will be paid out to company A. So this is also the other withholding calculation. All right, so we finished talk about the VAT and the business tax and also the withholding tax and so on. So now we talk about for the consumption tax. Consumption tax is only just applied to certain kind of activities and products. So you can see in the chart is only a few products. There is most of them is kind of luxury, and also some of just a protected industry Chinese government have. So basically the consumption tax is levied on the following activities, including, for the manufacturing and sales of the taxable consumer goods in China. So here, please pay attention that this is only when you manufacture it, and in this procedure, you need to pay consumer tax. And the other one is for the engage others to process taxable consumer goods. So that means it's one manufacturing company want to engage some other company in this procedure, the consumer tax need to be paid. For sure, there's another thing is for when you import your taxable consumer goods, it also need to pay consumption tax as well.
Okay. We play with numbers during today's webinar, so we have now a question related to the numbers for you, and the question is about consumption tax. There is one rate in the amount of 56%, and our question is to which products this 56% applies. So does it apply to certain types of the alcohol, cigarettes, or automobiles? Let's have it very quick question. Okay, so I'm closing now the voting. And let's see the results. So 27% of you thinks that there are certain types of the alcohol, 36 votes for the cigarette, and 36 for the automobiles. So what is the right number? What is the right reply? Grace.
Should be cigarettes.
Should be cigarettes, yeah. Okay. Okay, so let's move on. 56% for the cigarettes.
Yeah.
And now here we see other rates.
Yeah, for the rate about the consumption tax is already defined and regulated by the rules. You can see it's listed down very clearly here, so you can have a look about your business, and then you can know what tax rate is applied. Next, I would like to share with you about the three methods for the consumption tax calculated. Actually, it's also very simple and straightforward to say. One is use the fixed tax rate method. For example, for when you sell the fireworks, and the fixed tax rate is 15%, so it can be easily calculated like 150 you need to pay for your consumption tax. And the other one is the tax regulations means it's for the specific fixed amount method. That means the regulation has ruled a fixed amount about your consumption tax payable. For example, if you sell the lubricant, and then they have defined to say your fixed amount for your lubricant per liter is 1 So that means you just use your quantities, 200 multiplied by this 1 per liter, you can come up with the 200 consumption tax payable. Yeah, the third one is combined method. Just combine the first scenario and the second scenario to calculate, because some of the products can be partially defined by the quantity or partially defined by the rate. So you can see from the third sample is for your sales for your white grain wine, and then you can first use this 20% of your turnover, and second is you can use this 0.5 per kilogram, and then calculate the consumption tax payables. Yeah. So in the third session, I would like to share with you some polite reform regarding the VATs. Here you can see there's 9 category about the services changed from the business tax to a VAT now. The rate is listed here. I don't want to mention again, so we can go to the other one to say I would like to explain more about the VAT zero rate and exemption about the above services applied for the VATs. So because this is quite important for you to know, if you have some subsidiaries in China would like to provide the service overseas to you, no matter to you or to your customers, and for this kind of service can be either applied for the VAT zero rate or to the VAT exemptions. For example, for the international transportation, R&D services and design services provided by the local entity to the overseas entity can apply the VAT zero rate. And for the other, for example, energy management and exhibition service provided the local company to the overseas company can apply for the VAT exemption. So this will benefit the local company and also the overseas company as well, because you don't need to pay any tax in China for this kind of service. So please also pay attention for the VAT zero rate and VAT exemptions. The taxpayer must apply at the tax bureaus. So that means it's not automatically just approved by the tax bureau. You need to apply and the documents, all the things required by the tax bureaus. So you can then finally apply this zero rate and the VAT exemptions. So we would like to share with you 2 case studies to clarify more about what's the difference between the BT and the VAT for the service, and also what's the difference between the zero rate and the VAT exemption difference. First, you can see for previously, if your service is applied for the business tax, that means you have 100 income, you need to pay 5 as the business tax. Then your total profit is equal to the 100 income minus 50 cost minus 5 business tax. So your net profit is only 45. Now, if it's changed to VAT, so your income is 100, cost is 50, and you will apply for VAT now. You can see your output VAT will be 6, input VAT 5, your VAT payable is 3. So that means you don't have any tax burden here. Your profit will be changed from 45 to 50. So that means the company has more benefit during this polite reform. The second case is for the VAT zero rate and VAT exemption scenario. Based on this, you can see the difference very easily. For the zero rate service, you can enjoy the VAT refund for your input VAT. So that means this 3 input VAT is you can get it back in the later stage, and then your total profit will be 50. But on the other hand, if you just enjoy the exemption of VAT, your input VAT cannot be deducted and cannot be get refunded. It's your cost. So that means in total you will have 3 more costs in your profit and loss statements. So compare this to a scenario, zero rate is more beneficial to the company. Okay, so the last session I will share with you about the filing period. In China, maybe it's a little bit complicated, so you need to file your turnover tax based on bi-weekly, monthly, or quarterly. But the most common is a monthly. That means every month you need to file your tax in the following, within 15 days in the following days. So the other thing is you need to pay attention to meet this deadline. Otherwise, you need to be imposed on the late fee. It will be 0.5% per day, or it will be also penalties from 2,000 to 10,000 RMB fines as just asked for from the tax bureaus. So for the correct filing and also for the meted deadline is very, very important in China. Otherwise, you may face penalties or late fees, or you may be put on the blacklist of the tax bureaus.
Yeah. Thank you, Grace, for this very detailed and informative presentation. We have just few short minutes for few questions which we have received. And the first one is about the surtax. What was meant by the surtax? I remember we mentioned on some slides.
Yeah, right. For the surtax is kind of surcharge tax, and this is a kind of local tax requested, but it's different in different cities and provinces in China. So basically in Beijing, this surcharge is 12% of the VAT payment or business tax payment. This is a kind of additional cost of the company.
Yeah. Then we have one question related to the representative office. Mm-hmm. And the question is, if I can read it clearly, what kind of tax they need to pay in terms of the turnover taxes? It's about representative office.
Oh, okay. In China, representative office is kind of different entities. That means the rep office in China cannot do the direct business. Most of them do some marketing and also do some research and so on. So there is a special regulation for representative office. They need to pay the business tax based on the cost plus method. That means you have your operation of your representative office have a lot of expenses, and then you need to gross up your expenses into the deemed sales price. That means, and then you can pay the business tax and the enterprise income tax accordingly.
And last question for today, and question is, to apply for export VAT refund, you need to present export invoice, customs declaration, foreign exchange settlement form. Does this mean that you can only apply for refund after receiving payment from foreign buyer?
No, this is not so relevant about this payment, because when you make your export sales, you can have some credit terms. So, but you can apply for the tax refund before this credit terms is fine. Yeah, no need to wait for the payment.
Okay. Thank you very much, Grace, again for the presentation on this complicated topic. For those who are interested in the tax, different types of the tax, I would just like to remind that we have a guideline on income tax, corporate income tax. We have a guideline on individual income tax. We prepare in cooperation with Grace guideline on turnover taxes. And as well, we have corresponding webinars which you can find on our websites. So thank you very much for attending our webinar today, and we look forward to meet you in our coming webinars.
Yeah, thank you, everyone.